Meta. Let us do example 5, which deals with trading stock deficit and adjusting your trading stock amount that is in the trial balance before you do the comparison. We are given here the pre-adjustment trial balance for the year ended 28th February 2022 under the balance sheet account section. Trading stock amount is 900,000. This is pre-adjustments. It's trading stock value before we took adjustments into account. And then it says under nominal account sections, sales amount to 1.2 million, cost of sales amount to 800,000, and debtors allowances is 66,000, and stationery will be 12,540. Now, all that information under nominal account section, I will automatically take it straight to my statement of profit or loss. From the sales figure of 1.2 million, I will subtract our debtors allowances as given in the trial balance. Please note that for debtors allowances that is given to you in the trial balance, there is no need to calculate cost of sales on that because cost of sales on that have already been taken into account. So on that 66,000, the cost price of that 66,000 has already been deducted from 800,000 by virtue of it being recorded in the pre-adjustment trial balance. Automatically, we know that the amount has already been deducted from cost of sales amount. That is the information, the only information I am able to use at the moment. The first adjustment simply says a debtor returned goods with a selling price of 30,000 as these goods were not ordered. The company uses a markup of 50% of cost. This has not yet been put through. What you need to do here is to take that 30,000 and record it in the general journal because this refers to debtors allowances. Now, your option is to actually record this in the debtors allowances journal, but if it has been closed already and the totals have been calculated, probably you should just take this transaction and record it in the general journal. Now, when you record it in the general journal, please note that it will affect 4 accounts. It will affect debtors allowances, which will be debited. Remember, debtors allowances will always be debited whenever the customer returns goods. And we are going to credit debtors control. Debit debtors allowances, credit debtors control. The reason why we debit debtors allowances, remember debtors allowances is a reduction of sales account. So it is basically the inverse of sales. Now, when customers return goods, it's better for us to record them in the debtors allowances ledger account so that we can be able to determine how much percentage of goods were actually returned. It makes it easy for us. And it also makes it easy for us to come up with internal controls to ensure that our debtors allowances do not go up because that reduces our sales. As I always say, treat it as though just like when you trade your expenses. So when customers return goods, debtors allowances will increase on the debit side. It makes sense for us to reduce debtors control because debtors will be owing us less because they returned those goods. Now, those two accounts will be recorded at cost price. Note that the markup is 50%. Let us record this in the general journal. I will debit debtors allowances. In brackets, I put sales there to show you that it reduces sales. Remember, sales is income, and income decreases, it will decrease on the debit side. And the amount will be 30,000. We are going to credit debtors control by 30,000. This will also go under the debtors control column in the full general journal. And in this case, because I'm only using this portion of general journal, I won't do the debtors control column. So it will also be recorded on the credit side of your debtors control column, right in the general journal. And these represent goods that were returned by debtors. Why do we debit debtors allowances? It's because debtors allowances represents a decrease of sales, which will decrease on the debit side. Why do we credit debtors control? It's because our debtors control will decrease on the credit side as customers will owe us a lesser amount. Remember I said that adjustment will affect 4 accounts. We will simply find the cost price of that 30,000. Remember the markup was 50%. So now you are going to use that 30,000 and the 50% to calculate the cost price. The selling price will be at 130. The cost price will be at 100. And that is because our markup percentage is 30. Multiply by what you want, divide by what you have. You will take the 30,000. Because we want the cost price, you will multiply this by 100. But remember, this 30,000 is the selling price. That's why we are going to divide it by 130. Multiply by what you want. Divide by what you have. So in this case, we will get the cost price of goods that were returned. When goods are returned, that will increase our trading stock. And remember, trading stock is an asset. Therefore, when it increases, it will increase on the debit side. At the same time, this will decrease cost of sales. And cost of sales is an expense account. So when it decreases, it will decrease on the credit side. Remember, expenses increase on the debit side. So when they decrease, they will decrease on the credit side. Thus represents the cost price of goods that were returned. Trading stock is an asset. So when customers return goods, it'll increase on the debit side. As I've said, cost of sales is an expense, and expense will decrease on the credit side. I'll just leave it there for now. I am just going to do the general journal first. I don't want to confuse you, and then I'll go to the general ledger and go to the financial statements. And it says, due to riots, the company's warehouse was set alight and stock worth 38,000 was lost due to fire. So we lost the cost price of stock lost will be the 38,000. So that 38,000 will decrease our trading stock. So our trading stock will decrease by 38,000 because 38,000 worth of stock is not in the warehouse. We have lost it. So we need to adjust our trading stock account that is in the trial balance. Remember, so far, our trading stock account has already been adjusted by actually adding that 20,000. We added the 20,000 because it is the cost price of goods that were returned. Now we are going to subtract 38,000 because this is the cost price of goods that were lost. If you remember very well, in the trial balance, our trading stock was sitting at 900,000. So for now, we no longer have 900,000. We've got 900,000 plus 20,000 minus 38,000 because we have lost 38,000 worth of stock due to fire, damage in essence. Now, if you read the notes that I posted in the previous video, you will actually understand why I'm minusing that 38,000. If you don't understand, please go back to the previous video because I've explained it when I explained the notes in the previous video as to what you have to do when you have lost stock and the insurance company pays you a certain amount of money. Now, in this case, they say the insurance company will only pay us 80%, but this has not yet been received. And I gave you steps on how to deal with such a thing. So what are we going to do in this case? You will find 80% of 38,000 and 80% of 38,000 will give you 30,400. So that 30,400, it is the amount we are going to receive because it has not yet been received. It is the amount we are going to receive from the insurer. So for the 38,000 that we have lost, we will get some money, but the money that we're going to get will be 30,400. For now, for the current financial year, it will be a current asset. And as a current asset, it will increase on the debit side. So you will write it as income receivable, but I prefer to write it as insurance receivable because it is the amount of money we intend to receive from the insurance company. It will be paid out within the next 12 months. But remember, we're looking at the next 12 months from the 28th of Feb 2022 to the next financial year. Within those 12 months, we should receive that 30,400. That is why we are going to record it as a current asset. We are only going to receive 30,400, but we have lost stock worth 38,000. So when you take that 38,000 and you minus the amount that we are going to be reimbursed, you'll be left with the amount that you will never get back. You've lost it. You will never get it. And that amount will be 7,600. And that 7,600, we are going to record it as a loss because we have lost it. We will never get it back. Now, when you watch a video on definitions, I think I did it with the grade 9s, you'll realize that losses are treated the same way as your expenses. Actually, your losses are just your expenses. So we are going to debit our loss by that 7,600. How do we record this in the trial balance? Before I go to that, I will start by first adjusting my sales figure, okay? Remember my sales at the moment is sitting at 1.2, but that sales figure need to decrease. It should decrease by 66,000 plus the 30,000, which is your debtors allowances that we just recognized. So your sales will decrease by 96,000. and your debtors allowances will decrease. Remember, debtors allowances increase on the debit side. In this case, they will decrease on the credit side by 96,000. And the reason we do this is because your debtors allowances at the end of the financial year will be closed off against sales. So the amount will be taken to sales, and we are going to subtract it from the sales figure. Please write NB next to this because it's very, very important. Now I'm going to record the previous point or adjustment. I am going to debit loss due to fire, which is the amount that I will never receive, I will never get reimbursed for, and that will be 7,600. And then I'm going to debit the insurance receivable, which is the payout I expect to receive from the insurer. And that will be 30,400. It is a current asset. That's why I'm debiting it. Then you credit the total amount of stock that you have lost because we don't have it anymore. And that will be 38,000. And this is stock we lost due to fire. Now, loss due to fire, as I've said, it is an expense. That's why we debited. It will not be recovered. And the insurance receivable is a current asset. We expect to receive it in the next 12 months. That's why in the current year, we have to recognize it as a current asset, which will be recorded in trade and other receivables as insurance receivable. We are crediting trading stock. Why do we credit trading stock? Trading stock account will decrease by the total cost price of stock that we have lost. Okay. That's it with respect to that transaction. Let us go to the next adjustment. The company donated 12,000 worth of stock to Pilang. No entry was made with respect to this transaction. You know how to record donations. Donations will always be recorded at cost price. Donations is an expense, so we are going to debit donations, and you credit whatever you have lost or you have donated. If we donated cash, that will go to CPJ. In this case, we did not donate cash, we donated trading stock. And when we donate trading stock, make sure that you record donations of stock at cost price. Sometimes they will try to fool you and give you the selling price of the marked price of the goods that have been donated, or simply tell you how much profit you have forfeited. You need to use what I've just used previously to calculate the cost of sales amount of stock that was returned. Use that to determine the cost price. Don't be fooled. We are going to debit donations because donations will be an expense. You did this in grade 10 already. You should know how to record that. Then you will credit trading stock. Trading stock we're going to credit will be the same amount, which is 12,000. That is because our current asset, which is trading stock, is decreasing. Let me see how much our trading stock is sitting at the moment. It is 900,000 that we have in the trial balance. You add the 20,000, which is cost of goods that we returned, and then you minus the 38,000, which is the cost of all goods that were lost due to fire. And now we've just minused 12,000, which is stock that has been donated. In the trial balance, our trading stock is sitting at 870,000. Just to explain what I've done here, these represents goods donated at cost price. Donations is an expense, that's why we are debiting it. And trading stock is decreasing because we have donated trading stock. So it reduces the value of stock that we've got. Okay. After I've adjusted my trading stock, because all those transactions or adjustments affected the value of trading stock I've got in the trial balance. I know that in the trial balance, my trading stock is now sitting at 870,000. Now they say stock counts, which is right at the end of the financial year. After I've adjusted my stock in the trial balance, revealed the following. It revealed that I've got stock worth 900,000. So in my books, my stock is sitting at 870,000, but in the trial balance, my stock is sitting at 900,000. Now, it means that this 870,000 must be taken up to 900,000. Firstly, I will start by adjusting the stock that I have in the trial balance because of the transactions that took place before the stock count. And you realize that according to the stock count, my stock should be sitting at 900,000. So it means that 870 must be brought up to 900,000 by 30,000. When you bring it up by 30,000, we bring it to the stock counted amount of 900,000. That 30,000, because we're taking it up, it becomes a trading stock surplus. Trading stock surplus will be recorded under other operating income. Let us record this in the trial balance. I am going to debit my trading stock. Remember, it's currently sitting at 817. I need to take it to 900,000. So I will have to increase it by 30,000 and credit my trading stock surplus, which is income. Income increases on the credit side. And that is trading stock as per stock count. Then we come to the last adjustment, which says stationery used. Highlight that word, used. Stationery used amounted to 11,000. Stationery used amounted to 11,000. At the moment, stationery in the trial balance is sitting at 12,540. How much must we recognize stationery as an expense for? Note that 12,540, it represents the total amount of stationery that we have purchased. But I've said this in the previous videos and I've emphasized this. Only stationery used must be recognized as an expense. So they gave you your expense. Your expense can't be this 12,540. Your expense should be that 11,000. If 11,000 worth of stationery was used out of the total of stationery, which is 12,540, what happened to the other one? If only 11,000 of 12,540 was used, what happened to the other amount that we are missing? So when you take the 12,540 and you minus this 11,000, you will be left with 1,540. That 1,540, it represents what has not yet been used. And the stationery that we have not yet used will be recognized as a current asset, which is 1,540. Now we will credit stationery. Our expense will go down from 12,540 to 11,000. So we need to reduce it by that 1,500, which will, in the current financial year, it should be recognized as consumable stores on hand, which is a current asset. All right, please check out the next video for the general ledger, the statement of profit or loss, and the notes to the financial statement. Please subscribe